Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto.
In my video yesterday, I talked about a potential bullish breakout forming from Bitcoin's sideways movement. So far, this ideal bullish case has not played out. Bitcoin is still hovering around 107.3K, behaving like a stable coin since Wednesday, despite massive institutional inflows into the ETFs. On Wednesday alone, ETF inflows came in at $547.7 million. Thursday added $226.7 million, and Friday brought another $501.2 million in fresh inflows. Altogether, that is $1.275 billion in just 3 days, a huge amount of capital entering the market. To put this in perspective, the newly issued Bitcoin supply for the same 3 days had a total market value of only $144.8 million. That means ETF demand was around 8.8 times greater than the new supply, creating an obvious supply shock imbalance. If we now look at the price action, only Wednesday showed a meaningful move, when Bitcoin rallied from 105.5K to 108.1K. Since then, price has been consolidating around 107K, right in between two horizontal zones of past support and resistance, the blue line at 107.5K and the yellow one at 106.5K. Typically, Bitcoin does not stay in this type of coil for long. As we head into Sunday night and Monday morning, I expect a resolution. Whether that resolution is up or down, it is likely to be abrupt. You know the meme, Bitcoin, do something. When Bitcoin trades sideways like this, it often does something big right after. The 3-day liquidation heat map shows clear signs of leverage stacked on both sides of this range. Short positions using high leverage are at risk, around 109.14K, while heavily leveraged longs are exposed near 104.86K. At 25x, the risk zones widen, with short pressure appearing above 111.28K and long liquidation levels sitting down near 102.72K. This confirms what we already see in the chart. Both bulls and bears are loaded. Even small price movements of 2 to 4% can wipe out entire positions. The market is coiled, the tension is high, and the risk is building on both sides. If we zoom out to the 1-week liquidation heat map, we notice something else. Long traders seem more conservative. Their major liquidation cluster is down at 103.3K, but short traders have taken more risk, stacking their positions closer to current price, with a large cluster around 108.8K. This makes one thing clear: bears are more exposed. That usually opens the door for market makers to push price in their direction of maximum pain. If that plays out again, the breakout will likely be to the upside. I am still holding all of my long positions, entered between 106.8 and 108K. So far, no reason to change, but I am watching the range carefully. A break is coming soon. I will continue updating you daily. Join the free Discord for real-time trading thoughts. Click the like button if you got value from this video. Subscribe and turn on the notification bell to stay updated. And see you in the next one.